Welcome back to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me once again Alasdair Macleod. Today I would like to chat with Alasdair about an article he recently wrote, I think earlier in September, actually, one of the first days of September. He wrote an article called China or U.S., well, you can all go and read it, which I would suggest you do that and Alasdair's other essays that are there. He writes a weekly piece that's put up there at goldmoney.com. So goldmoney.com, and for Alasdair Macleod's insights, which are very valuable, which is one of the reasons he's one of the most frequent guests on this show. Thanks for joining me again, Alasdair.
That's very
It's really good to have you, Alasdair. Are you hearing me okay?
I can hear you fine, yes.
Okay, good. You are very critical of tariffs, and as are most economists, I think, of virtually every stripe. And you make the statement that, and I quote, tariffs arise out of political ignorance of the economics of trade imbalances, end of quote. And I agree with you, but it is also true that since about the time that Richard Nixon detached gold from the dollar, America has run chronic and deepening trade deficits that have served to enrich I would argue, at least, that's my view, to enrich the elite political, academic, financial classes in America at the expense of the middle class working people. But in any event, they're indisputable that we've had a chronic trade deficit. So if tariffs aren't the answer, what is the answer to this chronic trade problem that we have?
Well, you're absolutely right about unfettered monetary inflation. And the answer is quite simple. Stop monetary inflation. Yeah. Because what happens is if you push extra money into the economy, which is not actually, if you like, spent on production, and I'm talking about the existing stock. So you're talking about extra money coming into the economy, either in the form of base money or in credit, then unless the savers actually turn around and save that money, you're going to get a trade deficit. It's actually as simple as that. And so the trade deficit is simply the consequence of monetary inflation which basically allows the government to spend more than it raises in taxes. And so the answer is quite simple. Just stop doing it, and then you won't have a trade deficit problem.
In the process, as I mentioned, it also seems to have created reallocation of income from different classes. Do you agree with that?
Yes, I do entirely. I mean, the whole point about monetary inflation is that it transfers wealth from ordinary people to the government and the banks. And it does it in such a way that very, very few of them actually understand what's happening. And that's the beauty of it, because from the government's point of view, because if you raise taxes, everybody knows that you raise taxes. This way you print some money. It's complete. You can't tell the difference between existing money and new money that's come in. It's not as if they've got serial numbers or anything. And so therefore, you can do it and get away with it. Of course, at some stage you find that prices start rising because you're creating an imbalance in the economy with all this extra money. It lowers the purchasing power of not only the existing money but the new money as well as it sort of filters through the system, robbing people of the value of their wages and their savings. And that is actually what it's all about.
Yeah, redistribution to those that control the monetary system, essentially, and that's the government and the banks, as you say. Would argue that there are government-sponsored businesses such as the military-industrial complex that those fellows like it quite a bit too. But anyway, I don't want to get off the track here because you mentioned in your article that China has made some silly errors regarding its relationship with the U.S. One was that they should not have retaliated against Trump's tariffs. Why would China have been better off not to have retaliated against Trump? It seems like a tit for tat is sort of human nature, isn't it?
Well, it's human nature, and it's politically, it's almost impossible to resist the temptation. Yeah. But the fact is that if you impose tariffs on imported goods, what you're doing is you're taxing your people. And it's as simple as that. In fact, you see this with President Trump claiming, I'm Mr. Tariff Man, we're raising revenue through tariffs.
Yeah.
Actually, what you're doing is you're he's not taxing the Chinese, he's taxing the American people. Mm-hmm. And the same goes for China the other way. By far the best thing they could have done is just actually ignore the tariff. Difficult emotionally and all the rest of it, but purely from the point of view of ensuring that the Chinese economy produces the best outcome for its people, they should ignore the tariffs. You cannot do anything about someone else's tariffs imposed on your goods. Just forget it. That's their affair, unfortunately. But so this was a big mistake by China. If they actually understood what it was about, and the importance, if you like, of being able to buy from the cheapest source, the best source, whatever goods you need, that is of so much benefit to the Chinese economy. So they've, in effect, they've taken a huge step backwards by following President Trump with these tariffs.
Mm-hmm. Well, if that was a big mistake, I gather in reading your essay that a bigger one was made by China in allowing tensions in Hong Kong to accelerate. Can you explain why that was so bad for China?
Yes. The point about Hong Kong is that Hong Kong is the funnel through which all outside investment into China from the West goes. Now, this is very important because China has a massive program of infrastructure spending and general economic improvement, and that does need foreign portfolio flows. And it was by setting up something called Shanghai Connect, which basically goes through Hong Kong. And what it means is that an international portfolio manager can invest in China without having to go through exchange controls, and he can take his money out of China through exactly the same mechanism with no let or hindrance whatsoever. So it's a completely sort of free investment channel, as it were. So that is very important. Now, as far as America is concerned, she sees she has an enormous dependency, if you like, on foreign investment in U.S. treasuries in particular, for the government to continue to spend beyond its means without tapping, if you like, the non-existing savings of its people. So it needs those foreign flows. It needs them more than China needs them as far as America is concerned. So what does she do? She tries to destabilize Hong Kong. This, at least anyway, is the way the Chinese are looking at it. I mean, I have no direct evidence that this is the case, but this is the way the Chinese look at it. So, and we saw long before the current round of riots started that in America they started clearing the decks on the legislative front in case the Chinese went ahead with this extradition law, which was the earliest stage of being mooted. And having done that, the Chinese still went ahead with it, which I think was a huge mistake. I mean, for goodness sake, the Chinese can get anyone they want out of Hong Kong by doing it on the quiet. I mean, why produce a law which gives America the excuse to march in, stir up the agitation and put off every international investor from investing through Shanghai Connect? Right. And if you want a further confirmation of this, of course, there was this story last week that the American administration might force Chinese companies to delist from American stock exchanges. And there were various other stories about control of Chinese capital flows in America and all the rest of it. It's quite obvious that the American administration basically want the money either that China has or China is making, or China hopes to attract. That is why the Hong Kong thing was the most stupid mistake.
All right, so they made some stupid mistakes, but I gather your view is that China is an ascending power. It's going to rise no matter what happens. You comment on the bigger picture and say that China and Russia are positioned to take control of the global energy markets. Can you explain why that is happening and what it might mean for the future of the dollar, which has depended, of course, known as the petrodollar, of course. And so could you comment on that and perhaps what that might mean for the petrodollar?
Yes, of course. What I mean by that, well, Russia is already the largest exporter of energy in the world. Now, Russia's energy includes natural gas as well as oil. She is second in oil to Saudi Arabia. Basically, what has happened is that the Middle Eastern political situation has evolved in such a way that Iran has been forced into the hands of Russia by dollar sanctions against her using the dollar, and also into the hands of China. So you've got, if you like, three parties in Asia now effectively in control of the majority of the world's energy supplies. You've got Russia, Iran, and China, who does produce some, but is a huge importer. So from China's point of view, she has secured as much energy as she needs. Now, the situation is spreading from there because you will be aware that the Houthis have increased their strike ability. I mean, I think it was last weekend on a border town, a town which is just in Saudi Arabia. They apparently routed 3 regiments of Saudi troops, with all their wonderful equipment and all the rest of it. I mean, it seems that the Saudis actually couldn't organize light refreshment to a captive audience when it comes to military action. Mm-hmm. They've got all the kit, but they've got absolutely no ability whatsoever. The Houthis absolutely routed them. I mean, this is extraordinary. Not only that, but the story a few weeks ago was that it wasn't Iran which sent in the missiles to destroy or incapacitate the refining capacity of Saudi Arabia. It was the Houthis. Now, the Houthis do have the technology, but nobody wants to admit that this is the case. Now, think Iran, Houthis, Hezbollah. Now, suddenly, you have got this sort of new force gathering. And I think the way it is working is it's not trying to knock out Israel. I think they're moving towards knocking out Saudi Arabia. So there are very big developments going on in that part of the world which need very close watching. And we must be very careful not to take the line from Western governments who have an interest, if you like, in ensuring that the Saudis are not the problem and that Iran is the problem and the Houthis are just a sideshow. Yeah. That is not the case. That is not the case.
Very interesting. So Saudi Arabia, of course, Americans are wondering why we've been so close to Saudi Arabia after they drove airplanes into our buildings and attacked the country. And then, of course, you had this journalist that was recently done away with by the Saudis. So do you think, and I think in your article you mentioned something about Saudi Arabia being drawn more closely to China. She sees China as more of her future than the U.S. It seems to me that we could be looking at some real tectonic shifts here in the global geopolitical structure that could have some ramifications then, I guess, on currencies and the like, right?
Yes, I think that's true. I think I'm right in saying that Saudi Arabia doesn't supply any oil to America whatsoever. Her major customers are in Asia. And I think the objective of the end game that's being played, if you like, between China, Russia, and Iran are not quite so part of this particular aspect of the end game. But what they want to do, I think, is to capture, if I can use that in inverted commas, politically capture, if you like, Saudi Arabia from the Americans. And then they would very, very definitely have total control, if you like, of the majority of the world's oil supplies. Mm-hmm. And this is building Asia. It's Fortress Asia, if you like. That is the idea. And Asia on its own, with Eastern Europe, we're going back to Mackinder's heartland theory. It is quite clear that this becomes a major force. We've got something like 3/4 of the world's population involved. When you also include sub-Saharan Africa, which is supplying the commodities and raw materials for all this. 3/4 of the world's population. Suddenly we can see that this is coming under China's control, admittedly with her partners. And here is America trying to wage some sort of war against China, which was a mixture of tariffs, now beginning to try and choke off capital flows. And I mean, she's already, I think, really on the fringes of this and being excluded. So, we then come down to which currency is the more stable in a crisis, and that, I guess, might be your next question.
yeah, I would think that's on everybody's mind. I mean, if the U.S. doesn't control the oil market anymore, and it's controlled by three-quarters by China and Russia, and three-quarters of the world's population is now involved in that market, then the U.S. does get frozen out. What does that do to the dollar? Because it's my idea, my view. I think everybody that's thought about this understands that Kissinger went off to Saudi Arabia and arranged to have the dollar, all the oil from OPEC priced in dollars, which put a bid under the dollar when there was no longer any gold to justify owning the dollar. So this whole thing could come unraveled. I guess, how much time is it going to take, though? That's the question.
I mean, I think the timing depends on when the next credit crisis occurs. Okay. Because when a credit crisis occurs, we sit and actually think, who's actually got the debts? Now, we do know that there is a huge amount of debt in China, but it's not in the government. The government debt to GDP is around about 51, 52%. Government debt to GDP in America is over 100%. So you can see that on that metric, the American dollar is not in the stronger position. The other thing is that the Chinese government controls virtually all the banking system. All the banks are basically state-owned. There are a few private banks on the fringes, but they're a very small part of the whole thing. So this means that Chinese banks are not going to go bust, because the government basically stands behind them already. In America, you could have a situation where if we get another credit crisis, the government ends up owning a few banks, but that's not the best way to start owning banks. And not only that, but if you start doing it and you've got to put out huge amounts of capital, and you're already in the hole to 105% of GDP as a government, you've got a big problem in a crisis. So I would, this is very unfashionable view, I have to say. And I was listening to Steve Bannon being interviewed by Kyle Bass the other day, and they've got this totally the other way around. I think they're wrong. The answer to this, quite simply, is that if they go all out financial war against China, it's the dollar that will collapse, not the yuan. Yeah.
Well, they don't see it that way. It's very hard for Americans to see that, Alasdair. We have had dollar hegemony since, I don't know, I guess coming out of World War II, and then we went off the gold standard and then converted to a petrodollar standard. And so I guess it's really hard for Americans to see this. But you mentioned in your article that, the Chinese are savers, the Americans are not. And a lot of the debt, as you just mentioned, is owed to these corporations, but the banks that have lent the money are government-sponsored and they're not going to go bust. But you make a point in your article that it's very important to note, and it's very important in terms of the financial structure and stability, that the Chinese do not have that level of consumer debt that we have. Could you talk a little bit about the debt? We just have about 5 minutes left maybe. Talk a little bit about the importance of that debt, the difference in the structure between, even though they have 300% of GDP, the Chinese do, that it's not nearly as dangerous as it appears to most Americans. I guess most Americans think that China is going to go down and we'll be just fine, and the dollar will be eternally the world's reserve currency. But obviously, that's not something that history is going to. Yeah.
The quickest way to describe this is to think in terms of savers. If you have a very high proportion of saving in your economy, then the savers will place far greater trust in the currency than people in an economy where those savers don't exist. And that, I think, is the fundamental truth behind, if you like, in a gunfight at OK Corral. That is the fundamental truth for the backing of the yuan, which the dollar does not have.
With just a couple of minutes left, the last time we talked to you, you talked about the dangers of the world's reserve currency having negative interest rates. Is that a trigger you think that might actually send the dollar reeling to the downside? That is, you mentioned that the dangers and the differences of world reserve currency, because all the commodities are priced in dollars. And, if the dollar goes negative, the time preference issue that you brought up will become very important, and people will likely dump the dollar and buy commodities and stuff.
Yeah, absolutely right. And the dollar interest rates needn't necessarily go negative. If they go to the zero bound, and there is a belief that the next stage is for them to go negative, that will be enough to destroy the dollar, in my view.
Yeah. Well, I say it's hard for people. I mean, I'm 72 years old. I've lived in this country. I'm old enough to remember when we still had a quasi gold standard, Alasdair. I don't suppose you're anywhere near that age, but I remember it very well.
August
15th, 1971, I remember reading the New York Times, going into Manhattan from New Jersey, and reading about how this was a temporary thing. It wasn't going to last long, Nixon told us. But here we are decades later, and a lot of people have gotten very rich by getting rid of an honest monetary system. But it's on shaky grounds now, I believe. And, the one bridge, one road. I mean, China's plowing ahead, aren't they? And they're no matter what happens. I mean, this Hong Kong thing, it seems to me, is likely to be a small incident in the bigger picture, where the Chinese are certainly using their earnings from net exports to buy up the world's goods, to buy up producing resources, mines and oil and that sort of thing, right?
Absolutely. And I think the China's plan basically is to become more self-sufficient, if you like, in terms of, virtually everything. They're going to become more consumer-driven, which means that those savings will diminish. But the Chinese savings habit is very strong, like it is in Japan. And I mean, Japan has survived because it's savers, really. Against negative interest rates and everything else. So I think the yuan has got enough of those characteristics probably to see it through the changes that we're likely to have in the next 2 or 3 years.
Okay. With 1 minute left, what does the gold hoarding by China, the massive amounts of gold, does that come into the picture here somewhere when the dollar goes bust?
I believe it does. I think it's effectively a backstop. Now, if the dollar goes bust, then the whole fiat currency system is going to be undermined, threatened, and possibly go down the drain with it. It is very important for Asia to have a gold backing, if you like, to provide an insulation against that Western phenomenon, the collapse of fiat currencies. And I think it is that has driven the Chinese to accumulate over the years significant undeclared amounts of bullion. And I believe that could be in excess of 20,000 tons. This is the state. I'm not talking about the people. They've got a further 17,000 tons roughly, and this is an estimate. Gold and oil and rare earths are the commodities which China dominates and controls.
Okay, we'll have to leave it go at that. Thank you so much for being with us again, Alasdair. Always a pleasure.